Good afternoon, everyone, and welcome to our webinar today with BKL. My name is Roberto Napolitano. I'm the Chief Marketing Officer here at Innovate Finance. So today I'm delighted to be joined by Alisha O'Donovan, Associate Director at BKL, a top 40 firm of accountants and tax advisors with over 400 people and offices in North London and Central London. So great to have you with us, Alisha.
Thank you very much, Roberto.
Fantastic. So today we're going to explore BKL's insights into the upcoming FCA rules under CASS 15, understanding the implications for e-money institutions, EMIs, and gather maybe some practical advice for firms preparing to comply with the interim and end state regulations. So it's quite a technical topic today, but we are in good hands. So Alisha, I hand it over to you.
Okay, thank you. Thank you very much for that kind introduction, Roberto. Hi, everyone. It's great to be here, and it's great that you've all been able to join us this afternoon. As Roberto said, it is going to be quite a technical subject that we are going through, and there's only so much that we're going to be able to cover in the next 30 minutes or so. So with that in mind, it will be a bit of a crash course in CASS 15 and what that looks like for firms who are going to be impacted by this new regulation. So I'll take you through what we will be covering today.
And sorry, Alisha, just to step in here. So if you have any questions online, you can type your questions. There is a chat box on the Zoom screen at the bottom of the screen. So you can type your questions and we'll look at the questions towards the end of the webinar. So there you go.
Awesome. Thank you, Roberto. So today what we'll go through, I'd like to start off with why does CASS 15 matter? Why have the FCA proposed these new changes to take effect? Who exactly is impacted? What actually are the changes? We're going to go through quite a high level review of what those changes actually are, and then what businesses need to do next in order to be ready for when these changes do take effect. We'll also touch on towards the end, there are going to be some hidden benefits towards this as well. What do those benefits look like for you and your firms? So we'll just do a very quick introduction. So as Rebecca said, my name is Alisha. I've been with BKL Chartered Accountants and Tax Advisors for about 10 years now. I joined as a trainee, but at the minute I'm working very closely and specialise in financial services companies with a particular focus on fintechs and those who are regulated by the electronic money regulations. So yeah, a nice client base, and I'll take you through as well. We do work with a number of wonderful partners and clients as well. Some notable clients that we do work with, we have PayOnNet, also known as Railsr, as well as Pixels as well. We're delighted to be able to work with some great partners as well, obviously including Innovate Finance, who we're here with today, as well as Alisha Bank and Boville Newgate. We like to do lots of roundtables with them and do lots of deep dives into this particular subject matters. Okay. Before going into what CASS 15 is, I would like to take a chance to actually go through why does it matter? Why have the FCA brought in these changes? And it's to reduce consumer harm is the main end goal here. That's the impact that they're looking for. Some firms that have become insolvent over the last few years, there was an average shortfall of 65% in funds owed to clients. So what that means is there are funds that aren't being protected by clients, so by firms for the client money. The FCA are also opening up an awful lot of supervisory cases for firms who are regulated by the electronic money regulations. 15% of firms who safeguard have been subject to supervisory cases in 2023. And of course, when looking at who the end users of e-money accounts are, that tends to be individuals like people on this call or people who just ordinary people, really. Those over 40% of those individuals have at least one characteristic of vulnerability, such as low resistance to financial shocks. So What the FCA are trying to achieve here is to bring in regulations in place that will reduce consumer harm. We'll talk a bit about who's impacted. So it's important to note that these rules will take effect from the 1st of January 2026. These will affect authorised payment institutions, electronic money institutions, small EMIs, as well as credit unions who issue e-money in the United Kingdom. I'll take this moment to emphasise a point. This might go off on slightly a tangent, but I want to emphasise this particular point because when we do onboard new clients, what we tend to find is that when clients are electronic money institutions and are part of a wider UK group, we're finding that those groups are often falling foul of the Companies Act requirements in that if you have an electronic money institution within a group, that entire UK group needs to be audited. The parent company of that group, if it's based within the UK, also needs to have audited, consolidated financial statements. And we find that because this is something that's not within the electronic money regulations, this is within the Companies Act, that this is something that can often be missed. So we'll do a brief overview of what the changes actually are and what they mean for your firms as well. So we can categorize them as follows. So it's mainly about more robust reporting as well as monitoring by the regulator. Consumer protection, that's the end aim of all of this, as well as enhanced governance and protection. When it comes to the reporting processes, firms are now they now must conduct daily internal and external reconciliations. In the past, the legislation wasn't entirely clear. It was along the lines of as is more risk-based, and there was an awful lot more judgment that could be placed on how often these reconciliations are carried out. Now this must be daily. Obviously, the benefit here is we can ensure that shortfalls are dealt with promptly, which again goes towards the end goal of consumer protection. Firms must now also prepare a CASS resolution pack. And what that CASS resolution pack is if the company was to fail overnight, a regulator or an insolvency practitioner needs to be able to come in and conduct an orderly wind down. They need to be able to return customer funds quickly. And a CASS resolution pack is a collection of documents that will help the insolvency practitioner do exactly that. The monthly CMAR returns. So this is the client money and asset returns. For MiFID companies, this would be something that they would have been doing all along, but this is now something that is going to be required of electronic money institutions. All this does is it discloses to the FCA on a monthly basis how much client funds you are holding within that month. So again, it's going back to the importance of regular record keeping, improving the state of your books and records, and making sure that if ever asked by the FCA, you're able to identify how much client money you are holding at any given point in time. Keeping with the theme of consumer protection, so one of the key changes, which I think offers an awful lot more clarity, is that relevant funds, e-money, safeguarded funds, they will now all be held under statutory trust. The difference is that now those funds will be protected under the Financial Services Compensation Scheme, whereas in the past it was an awful lot less, it was more vague about where they ranked in the case of an insolvency. What would happen is those firms, if the client funds would rank along the same priority as all other creditors. So often consumers could be waiting on average 2 to 3 years to get their money back, which is it's quite a big deal if you're holding thousands of pounds or if you're a merchant and your funds are locked in and you can't access them. Another point is independent safeguarding audits are now mandatory. So where this used to be a case of in the past, an auditor would only need to produce a report and send it to the FCA if there was something material that the FCA ought to know. There is now no longer any concept of materiality. If even a pound of safeguarded funds is not properly safeguarded, that goes on your reports, that gets sent to the FCA. Another point there is, in the past, it used to be a case of any third party or normally a regulatory advisor would tend to carry out these safeguarding audits. Now it must be conducted by a statutory auditor. So that's one of the key changes here. And enhancing governance and protection, there'll be further requirements to consider the need for diversification. So for example, your banking partners, as well as additional requirements for firms who safeguard using insurance products.
Fantastic. Thank you. Thank you, Alisha. This is a very important, I think, slide for the presentation. So what are the changes happening? So I have a question on the consumer protection element of this. So do you believe that this statutory trust model will actually reduce in a meaningful way consumer harm during insolvency? Because we want to know about this protection of consumers a little bit more in detail.
Absolutely. And I think it's one of, even on onboarding with customer onboarding, if they know their funds would be protected under the Financial Services Compensation Scheme, and they know that if a firm fails, they're not going to be waiting 2 to 3 years to get their money back, it's actually going to enhance business in the UK with these changes. But also from the consumer's point of view, they'll have that extra level of trust. And it is a big deal if you're just an everyday person and you keep your money in an e-money wallet, and if you're waiting 2 to 3 years, that could be the difference between bankruptcy and not. It could also be the difference between merchants failing and not. So these enhanced protections, I think, are going to be absolutely critical for businesses in the UK.
Fantastic. Thank you.
Thank you, Roberto. So what we will do now is touch upon what firms need to do next. So now we know what the changes are, we know who's impacted. Now what do we need to do? So we need to be firms will need to be at a point where if they've not, depending on where you are in your journey with this, if you're already kind of, yeah, we know all about CASS 15, we're ready to go, or if you're right at the start of it, what you need to do is assess where you are now. Where does the regulator need you to be by the 1st of January 2026? That gap analysis would help you prepare that change management plan. You can see where your shortfalls are, or you can see where there'll be resources elsewhere in your business that will be best placed in order to get you ready for this. What's really important as well is that the regulator would want to see any key decisions or challenges documented and evidenced as well. We'd recommend contacting your banking partners as well, because these funds that are going to be held under statutory trust, the banks will need to issue you with a letter that it's in a very prescribed format to say, we acknowledge that these funds are held under statutory trust for the purposes of safeguarded funds. Equally as important is getting ready for this as soon as possible. I mean, we've got 7 months, 6 months in order away from this in order to take place. So engaging with your statutory auditors and engaging with regulatory advisors, it's important that you do this as soon as possible. Ideally, those with sector knowledge, but a statutory auditor would be able to help you get ready for this, for these changes to come in. They could do an interim audit as if this was an audit that would happen next year, and see what would have gone to the FCA if we were doing this audit next year. Equally, engage with regulatory advisors as well. They're a really useful tool in order to help you with the documentation. There's going to be a lot of documentation that will need to be prepared if the FCA ever asks for it. Engage with regulatory advisors and they will assist you with preparing, for example, the CASS resolution pack and other things as well that will need to be documented. When you are documenting your resolution plan, to make the time as well to continue to maintain that. It needs to be a living, breathing document. It would need to have details of key contact details, of key governance structures, and who would need to be contacted in the case of insolvency. Equally as important, we need to factor in submission deadlines. So in the past, it wasn't really prescriptive when the audited accounts and safeguarding audit report would need to be submitted to the FCA. Some clients would just submit to the FCA around the 9-month filing deadline. But now those deadlines are going to be an awful lot more stringent next year. So for audited accounts, it will be 80 working days after the year end. So if you have a 31 December year end, then you are normally looking around the 25th of April. Similarly, with safeguarding audit reports, that's 4 months after the year end and it has to be submitted to the FCA. So they tend to fall around the same time. So for a 31 December year end, that would be on the 30th of April. So it's generally in that last week. For March year ends, you're looking at July.
Thank you, Alisha. A question on the resolution packs. How should firms approach in building and maintaining this CASS resolution pack?
Yeah. So again, it's just going back to that point of engaging with regulatory advisors who would be key to assisting you with this. So what I would also recommend as well is future planning to make sure that the CASS resolution pack is updated as a living, breathing document. It's not something that's going to be prepared and then put in a filing cabinet and not looked at again and it's forgotten about. I think it's important to remember as well that it needs to be ready and up to date should the FCA ever ask to see it. And they would expect you to be able to hand that over without delay. So it's important that the CASS resolution pack is future-proofed as well, in that it can be easily updated. I think if it has a very clear index as well, so that a insolvency practitioner can come in and actually be able to find the information easily. If it's quite difficult to access, then it defeats the purpose of the pack. So I would make it really clearly indexed, make sure that you've got that everything is, if you speak to a regulatory advisor, everything that is needed is in there, and that's clearly indexed. I think that is probably 90% of the job, really.
Thank you. Thank you very much.
Thank you. Okay. What I would also like to touch upon is what's in it for you. And I think this is where it's key. And in general, complying with CASS, it's not just a legal obligation, it's part of being a responsible business and being trusted by your customers. And I think the FCA have changed in recent years from being more of a principles-based regulator to an outcomes-based. And if you can always think of what is the outcome that the regulator here is looking for, and with this, it's consumer harm or consumer protection. If you can always focus on what the regulator is looking for, then having a good relationship with the regulator will do you infinite amount of good. So having better governance and compliance is a massive benefit from this. It will future-proof you as well against any other regulations that come in, as well as any industry events that are unexpected. And I think the key thing here is risk management as well. You'll be able to spot really easily there's a safeguarding risk here, or we can see that something is coming up because this is stuff that you're looking at every single day, whereas previously it wasn't a requirement. And having a well-maintained resolution pack as well would help you to identify and to monitor those points that would trigger your wind down plan as well. If your wind down plan is ever triggered, you have to notify the FCA. Having that well-maintained CASS resolution pack would really benefit you and help you to make sure that those trigger points are not triggered, and would have the regulator off your back. I think having a good relationship with the regulator is key. We've seen in the past some firms that have failed, and we find that the key characteristics of those firms are those which saw regulation as a necessary evil. They had the attitude of what is the bare minimum that I need to get away with to make the regulator happy. They didn't have a particularly compliance culture. And I think the key thing here is if the regulator can see you leading by example, not only will it be infinitely better for your business, it will be having a good relationship with the regulator would do a world of wonders. And I think just bringing back again to what the whole purpose of this is, improved client protection and trust would mean that clients will be more likely to do business with you. Clients who trust you, clients who know that their funds are going to be protected, will do more business. And I think that's probably one of the key benefits from this as well.
Excellent.
Risk management. Sorry, thank you, Roberta.
Yeah. So I had actually a question on the governance and compliance. I think you already answered that question, because my question was, what would you advise to firms that are actually looking at governance and compliance as a tick box exercise? I think that was the question, but I think you answered that one. So maybe another one would be, what would you say to firms that are a little bit behind in preparing for these changes in terms of what they can prioritize at the moment?
Okay. I think one of the first things I would say is don't panic. There is still time. The second point I would say is if you can engage with auditors and engage with regulatory advisors and have those cogs turning in the meantime, I think that's the starting point here. And if you don't have those in place, then that's going to be a key blocker for you. I think if you're able to engage with them well, then you're going to get an awful lot more back out of them. So, for example, like I said, an auditor can help you get to the point where you're ready for the 1st of Jan by doing an interim audit. They can get into the nuts and bolts of your systems and controls and advise on them, probably more so than any other practitioner could do. Regulatory advisors will be able to help you prepare the documents and advise you of any other changes that the FCA are bringing in as well. But going back to, I would say, don't panic, but act now. There is still time, but if you act now.
Thank you.
Okay. So like I said, that was a bit of, in a nutshell, what CASS 15 will look like for firms. So that takes me to the end of our content. What we have on the slide now is my contact details. Please do feel free to reach out to us if you have any other follow-up questions or concerns. This is the kind of stuff that I particularly enjoy talking about, so I'd be more than happy to talk to anyone about concerns that they might have. You also have a QR code as well on the screen, which will point you to being able to reach out to us as well.
That's fantastic. So I think we have a few minutes left for today's webinar. I think if people online have questions, there's a Q&A box. You can type your questions and we can try to address them now. So let's see if there's any questions. So far, I've asked my questions. There's a lot more possibly from people working in compliance and governance. This is a very important change in regulation. So any questions, let us know here in the chat box. We can wait a few more seconds. I just would like to thank Alisha for these very important insights on CASS 15. I can see there's a question here. Yes, I think that's a good question. Do we know the safeguarding audit format template yet?
Yes, so it will take the same shape and form as those which were done under MiFID. That's generally the approach that we've been taking, though, in the last few years. What it will conclude on is, generally speaking, what it will conclude on is, has there been adequate safeguarding arrangements in place during the year as well as at the year end? So particularly around the year end and December year ends as well, we find that sometimes because the Christmas break can mean that people don't do their reconciliations or do their transfers properly. That can often then be a breach that we have to report at year end. What I'll also point out as well, so you'll have the cover letter at the start, which will say we've conducted our audits, gives our opinion, but then at the bottom, we have to list out any breaches that either the firm have identified or the auditor has identified. So the firm itself will maintain its own breaches register. That breaches register may not necessarily be things that have been reported to the FCA because they will only need to report things that are material. The auditor will have to report everything. So only things that are covered by CASS 15. So anything outside the scope of that won't be included. So it will be a case of listing out each of these breaches, which rule they breach, but there will also be a space at the end as well for the firm to comment. So if we've identified a breach saying, oh, this reconciliation wasn't carried out on this date, there will be a space for the firm to actually then put in a comment. And I think this is the bit where it's key. This is the bit where the firm can say, we spotted this. We have we've now made all of these changes. We've now carried out further training. We've made sure that this won't happen again. And that's the bit that the FCA want to see. What I'll also point out as well is if the FCA see a clean audit report, they won't think, oh, that's great, they've got really good systems in place. They will actually think that you don't have the systems adequate to identify breaches. They expect to see breaches. We're all human. The FCA handbook is 6 feet tall. We're not always going to be compliant. It's going to be difficult. So
Thank you, Alisha.
yeah, so that will be the key bit there.
Yeah, there are another couple of questions here coming in. So the second is, what are some of the challenges you've seen e-money firms face due to these changes?
I think one of the biggest things is resource. And when I say resource, I mean people. Some of these firms can be small startups and there might be one individual sitting in the finance team, or they might outsource compliance or have one person sitting in the compliance team. I think one of the biggest challenges there is that you need to put bodies behind this, and finding those individuals who have the competence and the expertise to be able to carry out these reconciliations, I think is probably one of the key challenges that in order for firms to get ready for that.
Thank you. There's another one coming in. So are all EMIs covered under FSCS?
I think there are certain circumstances because there are different categories of electronic money institutions. It's an interesting question. I will have to double check that point, and I'm more than happy to respond to that. I think we have contact details. I'm more than happy to follow up on that.
And there's also another one coming in. What are the additional requirements for firms who safeguard using insurance products?
So this is a funny one because it's not actually one that's used really commonly. So it's not something that the FCA have put particular focus on. But what I'm finding is that more and more firms are starting to use this product. I think part of the additional requirements is making sure that that you have considered the right firm or considered the right insurance provider, and you've done your due diligence, and you are demonstrably, you have evidence that you are continuing to review the suitability of each of these insurance products providers, would be one of the main ones.
Thank you. Thank you very much. Another one, we have a couple of minutes, so let's see if we can address this. Actually, two more questions. Is there an expectation that reconciliations will need to be carried out on weekends?
No, absolutely not. We all have lives, and the FCA have lives. If the FCA are not working on the weekends, then there's no need for firms to be working on the weekends. I think I'll just clarify that point. It's working days. So when I was talking about around the year end, around Christmas time, obviously no one wants to be sitting there on New Year's Eve doing their reconciliation, but it's just but sometimes things can lapse around that time. People go on holiday. So when I say that we see year end breaches, it's because no one has been around to conduct the reconciliation on the first working day of the new year, or done the last one of the previous year.
Excellent. And then the other one is, as the FCA indicated, when the end state rules will be published?
So we're expecting them to come out with more clarification soon. It will definitely be before the end of this year. And I think there will also be something where I think they'll want to see how the interim rules are being applied as well before then finalising what those end state rules will be published.
Yes, thank you. And then there is, I think this, I don't know if it's a question or just additional information. The template for placing monies with third parties under statutory trust, is it similar? Sorry, it's a question. Is it similar to the one used for CASS 7?
Yes, or at least we're anticipating it to be. And the FCA are really prescriptive about the format for which it applies, and they'll be releasing that guidance, and it's something that you would take from the guidance and you would draft it yourself and issue it to the bank and say, sign this. And so it is really prescriptive. It is going to be pretty similar to CASS 7.
Okay, I think we're running out of time, but there's a final question, maybe Alisha, for you. Do these regulations apply to EMDs, electronic money distributions?
I know that it applies to payment institutions. I will have to double check the points on electronic money distributions. I know that there is something around firms who are payment institutions but don't hold safeguarded funds, because that's done through an electronic money principle. They are going to be affected in different ways, and I'm more than happy to follow up on that point, because I'm also conscious that we are running out of time as well. But yeah, I can come back to you on that point.
Fantastic. Well, first of all, thanks everyone for listening and also for all these very interesting questions, but especially thanks to our guest today, Alisha O'Donovan, Audit Associate Director at BKL. Thanks so much, Alisha, for today. I think very insightful.
Thank you, Roberto.
And thank you for listening. Until we see you next time for our Innovate Finance webinar series. Thank you very much. And
thank you, everyone. Cheers. Bye-bye.